Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, penultimate day of the year, 2025. And it's kind of quiet, except maybe if you're looking at gold and silver, where there has been a bit of a round trip in that sense. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant Surbi and Mangalam with me. Guys, good morning.
Good morning. Welcome back, Prashant.
Welcome back, Prashant.
While that is. I think the markets weren't doing anything because they were missing your presence.
I just saw prices are exactly where they were when I logged out a week ago.
It's not nothing.
So someone said maybe you should have taken a longer break.
You called it
No, we missed you. We missed you.
You called it the penultimate day of 2025. From an FNO trading standpoint, it is the last day of 2025 because today is also the expiry. And I was looking at data from the day the Nifty started the December series. The Nifty was what? 25,860 thereabouts. Where are we? 25,940. So all of 80 points in all of December. So, even if you logged out at the start of the December series, the market wouldn't have been.
Guess who's not logged out? Those FPIs.
Yeah.
It's kind of shocking that even in the last one or two trading sessions of the year, where you'd expect all desks would be shut, they still managed to sell in the cash market. Some 2,000 crores plus selling happening.
The gross volumes are 60% lower. So 60% of them have logged out. The 40% are doing
that's stats. At the end of the day, there's over 2,000 crores that's gone out. But anyway, we hope that the next year is going to be better. 2 more sessions to go. So let's see. I
discovered a new word. Today is the penultimate day.
Yeah.
So there's a word for yesterday. How would you describe 2 days before?
Penultimate?
Anti-penultimate. Ante. A-N-T-E.
Ante-penultimate.
Last but two, basically. Third last in that sense. So anyway, let's just quickly kick off with, just the global market action, which is still on. And maybe last night, a little bit more in terms of price action as compared to what we've had. Silver and gold essentially really, center stage. U.S. equities lower, and of course, gold and silver prices took a bit of a knock as well. And, not very large. S&P down a little bit, 0.4%. The Nasdaq down about 0.5 actually. So those are changes. But the real story, of course, and the chatter is all about what's happening with precious metals. So a big correction. So yesterday, silver futures opened about 4% higher. They made a high of about almost 83 and then sold off 15% from that point. Gold prices, similarly from the highs, turned around about 5%. People are scratching and looking for reasons. There are lots of social media posts talking about how a large, systematically important bank has taken a large hit, etc., but no confirmations to any of that. What there is confirmation about, of course, is the fact that and this is not new, CME has announced higher margin requirements from the new year, starting the 1st of January. So is this an unwind in what has been a ferocious rally over the last 1 year? Silver itself is up some, 150, 160 odd percent. It's just maybe just to pull very large gains sometimes get you very large corrections along the way as well. Oil prices 2% higher. Here there is some news. There is, of course, the US-Venezuela tensions, which continue. But on the other hand, you also have Russian President Putin, who said that Russia would revise its negotiating position after an alleged drone attack on one of his residences, Putin's residences. It basically pushes out this hope, and that hope was there 2 weeks back, that perhaps some kind of a deal is imminent, peace deal, a ceasefire, etc. is imminent. You also have Ukrainian President Zelensky asking Trump for a 50-year U.S. security guarantee. U.S. has so far, of course, offered a 15-year security guarantee against further Russian aggression. Later today, you have the FOMC minutes, you've got the ADP weekly employment data, some house price data, etc., which I think markets will watch. Here in India, it has been confusing, as I said. I logged out a week ago. Prices have not changed. Base metals and their equity derivatives have done well. Things like copper, silver, gold, and consequently names on the equity side like Hindustan Copper, etc., have been big movers over the last 5-6 odd trading sessions, except that not very much. Yesterday, the Nifty closed below the 20-day moving average, which is a bit of a short-term reversal level. So, I mean, you know, but it's also true that it's a bit confusing. You look at a lot of charts, stock-wise charts, and in many cases, there are signals that stocks are bottoming out and reversing, whereas, of course, the Nifty is doing its own thing. So, maybe, you know, in the new year, once everybody's back and, I mean, volumes start to pick up, etc., you get a better sense, because otherwise, I mean, not really very much. On the Nifty Bank as well, we are very close now to the final support, which is the 40-day exponential moving average, which is 58,735. So those are levels for the Nifty Bank. So for the Nifty, yesterday's low 25,920 is important, and then of course the recent low about 5 days back was 25,700. For the Nifty Bank, the 40-day is the support, which is 58,735, which is getting closer and closer. So not a great setup, at least as far as the frontline indices are concerned, but at the same time, not very sort of conclusive sense that, you know, the market is breaking down or anything as we close this year out. So that's the picture. Mangalam, what's on your radar?
Yep, not pretty conclusive in terms of a direction, and that's exactly what you know, the FNOQs are stacked up as well. If you look at the Nifty Bank, the mid-cap index yesterday, yes, they were mildly lower, but were they, you know, breaking down? Perhaps not. And the other part is that as we move towards the end of the year, you know, on lower volumes, the impact is a lot more. So the same dollar sell, because of the lack of liquidity, would result in a bigger price move, and that's something that we saw in the broader markets as well. So advanced decline for the last 4 or 5 trading sessions have been firmly in favor of declines. Over 2,000 stocks in the red yesterday as well. And what did well on Friday undid its gains yesterday. So, you know, we had the metal stocks do extremely well on Friday. Well, that came under some pressure yesterday. All the railway stocks did well earlier, and now that came under pressure yesterday as well. All in all, if you just look at numbers, the Nifty and the Nifty Bank are stuck in this very narrow range. The Nifty broke below the 20-day moving average yesterday, which is just shy of 26,000, but is above the 50-day moving average. So if you look at both these averages, they themselves have a difference of what, 70 points between the two of them, and the market is bang in the middle of that for the frontline index. Even the Nifty Bank, you know, it's a 500-point range, a mere 500-point range on 58,000, 59,000 sort of index, the 50-day and the 20-day moving average. And the December series expiry today. All of December series, despite the move that the markets made on either side, it's moved 0.002%. So that's the kind of move that we've seen in December series. The FIIs, they continue to sell in index futures. Let's see where that goes, because we've been waiting for some short covering to come by. For that, the market has to cross important levels. The only thing that may stand today is yesterday those put writers, you know, got it on the wrong side. So 26,000 put and the 26,050 put. All of them were caught on the wrong side, so they had to cover their positions. And today, there is writing at the 26,000 call and the 25,950 call. Will the call writers get stopped out today or not is the big question. And that may be the case towards the latter half of trade, largely because the put-call ratio is sub 0.7, which is indicating, you know, slightly oversold calls in the market. So yesterday, the put writers got it wrong. Today, maybe the call writers may get it wrong. Just watching out for 2 stocks, Hind Zinc and Muthoot Finance. Because of the decline that we've seen in precious metals, Hind Zinc has been on this record rally, and Muthoot Finance as well, as a beneficiary of higher gold prices. So will we see some profit booking on these names as well? Is something I'll watch out for.
Okay, absolutely. Let's keep them on the radar. By the way, precious metals, from the lows of yesterday, between the high and the low, the swing was 15% yesterday. And from that low of about $70, there is once again buying in Asian trade this morning. A bit of a climb back is happening. Silver is already back at about 73 last I checked, almost going towards the 74 handle. So yeah, let's see how that plays out. Asian markets, for what it's worth, you're not getting any clear cues there. Listless, directionless. There's a little bit of red, a little bit of green. By the way, SoftBank is hitting headlines in Japan this morning. They are investing $4 billion in another data center company. So yeah, AI continues to be top of mind even as this year dies down. Let's pull up the GIFT Nifty and the implied open. It's suggesting that we'll probably have a cautious start. The bulls couldn't hold on to 26,000 yesterday. And well, at the start at least, they may struggle. Now, the question is whether the buyers will come in or whether the buyers have gone on New Year break. And I think we'll have our answers over the next couple of hours. Well,